Good morning. Welcome to Morning Call. Yesterday was a very sluggish day. Despite good news from both Infosys and the IIP front, the Nifty just could not go up. Maybe because it had an eye on global factors. And this morning, the global factors are not supportive. Asia is down. There's some bad macro news from China as well with the CRR hike. And even the US markets did not look particularly strong. So all indications are that the downward slide which has started for the last 3 days might actually lead the Nifty below 5200 today. Not a very big day for earnings either today. Good morning, Mithali.
Hi, Utin. Morning. The first real salvo has been fired in terms of rate tightening.
Well, this was supposed to be in India, but it's happened in China first. So, yes, the world will take notice of the fact that China is talking about overheating and that there has been a CRR hike. The commodities market will feel the heat perhaps because that's where the real outperformance has been. And to that extent, I guess India's halt might have been stalled for the moment because it looked like after the breakout past 5180 that we were marching past 5300 quite easily. But it appears that the market is more sluggish than that and it's not even reacting to good news. So, a little tempered the enthusiasm this morning and we may have another sluggish kind of start to the day.
It looks like the first hit in the high beta space within the commodities, the spaces that were running the hardest have corrected.
And justifiably so, because they have had a great streak of outperformance. I think last week we saw the first signs that China might be getting a little worried about, worked up about overheating. And sure enough, they followed up with a CRR hike. I think there's anyway a lot of deliberation in our market about and pondering about whether the tightening cycle will also ensue sometime very soon. And the fact that our big neighbor has done it already, I think will lead to some more debate out here on whether the stock market needs to price in a little bit more of tightening. The jury's out on that, but I think those kind of deliberations might just rein in sentiment a little bit. But that's not the only headwind. That may well be the most important headwind this morning. But I think a couple of other small warning signs are popping up. Earnings season there has not begun in the way most people expected, with Alcoa coming in with a fairly weak set of earnings. That's not very encouraging. And you've had the specter of there is some further regulation in the banking space in the US and the EU. So I think there are a few headwinds which have built up over the last couple of days. Is it enough to break the markets back and stop its uptrend? I don't know, but we'll have to wait and watch. For now, it's baby steps in terms of headwinds. But I think they probably are sufficient enough for the market to just about trade in a bit of a sluggish range for the moment. I think that's what the market is watching most closely now. What's the outcome of this whole China tightening and global outcome debate for the first quarter of 2010?
Which is what we seem to have done. I mean, there's been no breakdown. It's just been very sideways.
It has, and yesterday we drifted down almost to 5200. This morning we'll probably get back to that breakout level of 5180 for starters, and that's an important level because we took our time crossing over that 5180 hump. Broadly speaking, for people who were trading longs positionally, I think they would have kept their stop losses somewhere in the zone or vicinity of 5150 or maybe a bit deeper down at 5100. So you're now approaching levels where support should kick in. Because if they do not, then I think the positional long traders might give up on that 5500 rally for which they would have been playing after the market crossed over 5180. So the sluggishness of the last few days has got the Nifty back to what the long traders would ideally hope to be the base for the market this time around, 5150, 5180. And I think the next 50-80 points are quite crucial, therefore, to hold out if indeed traders are still going to trade with the hope of 5500. If that does not hold, I think the market may move its outlook to more range-bound trade between, say, 5000 and 5300 rather than a break past 53, closer to 5450, 5500. So I think the next couple of days in that sense could be quite interesting and crucial. The important point yesterday was the market was sluggish despite good news, and I watched that very carefully. It betrays a lot about how the market is feeling. 2 doses of good news, first from Infosys pre-market, then in the middle of the day from IIP, and despite that the Nifty ends about 40 points in the red, that is not conclusive, but is generally not the sign of a market which is feeling great.